Where does innovation in Southeast Asia actually start? Here are 3 conversations from the archive. Anthony Chow of Igloo on a smart lock for doors with no Wi-Fi, built after 11-hour installs and a recall. Kelvin Teo of Funding Societies on turning Asia doesn't need innovation into a playbook. And Dennis Velasco of Prosperna on why none of it counts until small businesses trust you.
What's interesting is that, you're making this set of decisions around this, right? You have to figure out how to hack the product together, just hardware, so selling, etc. So I'm just kind of curious because it's such a also rare thing because in hardware startups, not very common. Everybody in Singapore is doing software as a service or fintech or everything. Did you find it difficult, the hardware side, or was it very straightforward for you?
I think at that point in time, we was a little bit naive as well. But we thought that locks have been around for hundreds of years, thousands of years. How difficult can it be? So, those are famous locks for us, So when we created our very first lock, I still remember, we basically bought parts from China and then we wrote out a little bit of firmware within there so that we can remotely manage it. Yeah. And then we started selling it. So I remember the first couple of locks that we started to get to market, we sold it at $99. We sold about 200-300 units out there. And then we started to ship it. And what happens was that we can't even install the first 10 because doors are different. And then we forgot to ship a certain part in the door lock. And I remember the first installation that we did, this was during a little bit of the beta trials. It took me 11 hours to install the lock because the door, maybe similar to what you have here, has a big glass pane inside there. So even the installer didn't really know how to figure it out. So we were very worried at that point in time, right? Initially, we thought, hey, we just need to sell locks to every Airbnb host and we'll be rich. But once we started getting down to the execution piece of it, the installation, different doors have different kind of regulations, specifications and all that. And we started becoming pretty concerned, right? And then even the entire supply chain as well was also very difficult for us because when we have very low volumes, only certain manufacturers will work with you, right? You can't work with those which are big at scale where quality and QC is 100% with ISO certifications, but the smaller ones, many of them tend to maybe ship you one time and that's it. There's not even warranty and all. Yeah, so I think the first 2-3 years were years of pain and learning, figuring out how to manage hardware supply chain at the right scale that we need it to be, and also finding distributors to bring our products to market who actually know a thing about locks that we didn't know anything about. Yeah, so I think some of the learning challenges at the first 2-3 years of the business. But I think one of the things that really helped us, along this way was the customer point of view, right? Because we were really creating a solution that the customers wanted. Now, because no one else, at least at that point in time, were really solving for this niche market. Think about it, right? There's about 3 million hosts all around the world. But, I'm a smart lock player from one of the big competitors. They are not going to care about the 3 million people. They're going to care about the billions of people who need smart locks on the door, right? So that's their market. But we were very razor focused on just this segment. Yeah. So the solution that we created was not just the lock itself, but also the entire software suite. So we were writing scripts to connect to Airbnb so that we can, once somebody makes a reservation, we can automate a check-in process for the guests to check in. So it became like a self-check-in solution that we were pitching to Airbnb hosts, and the lock was just one piece of it. And because of the razor focus on this market, one of the unique things that we had designed into our locks is that it has to be a non-connected smart lock.
Like a non-connected smart device.
Exactly.
So what does it mean?
Yeah, what does it mean? So the thing that we learned was that when you actually design a smart lock for an Airbnb property, a lot of times this property, because of vacation, many of them might be on the mountains, by the beach, or in the basement. Actually, if you go to UK, a lot of Airbnbs are in the basement, right? On the house. Many times the Wi-Fi doesn't actually hit the door. So if you bought a regular smart lock, right, that is Wi-Fi connected or Z-Wave connected, a lot of times when you want to set the code for the lock for a temporary code for guests to check in, the Wi-Fi might not hit the lock. It might not work. And when the guest walks up to the door, they punch in a code, and because of Murphy's Law, most likely it's just not going to work. And in our initial first couple of hundred locks that we shipped out to Airbnb hosts, honestly, more than half of them didn't work just because of Wi-Fi problems. So we had to recall some of these products, and it was not really our problem. It was just really that just Wi-Fi is the luxury that it doesn't exist in many of these properties. So what we needed to do was to then go back to the drawing board and say, how do we make a smart, non-connected lock, right, for this market? And the way we went around doing it is that we had those banking token technologies, right, where you can create one-time password like the Google Authenticator system. Yeah. So we designed a Google Authenticator platform into our locks itself. Right. So remotely, you can create a one-time code or a 2-day code that the lock can recognize, even though there's no Wi-Fi at all.
Wow.
Yeah. So this was, I think, a very interesting application of the banking token technology into a smart lock with a software suite that's connected to Airbnb.
Right.
So then we relaunch again to the market with to Airbnb hosts, and we say that, look, this product, you can just put it on your door. You don't have to connect to Wi-Fi at all. It's going to change the code every single time for every new guest checks in. And when they check out, the code automatically expires. And when your cleaning staff comes in, a new code can be sent. And all these codes are independent from each other, unique from each other. Yeah.
That is a good feature.
Yeah.
I can
So
imagine.
this became like a great feature, great sell. And we actually managed to get Airbnb's attention.
Right.
So Airbnb, I think it's end of 2016, a couple months after we launched, they gave us a global partnership. And this immediately increased the brand exposure to all the super hosts all around the world. And anyone who owns an Airbnb suddenly get exposed to the Igloo home brand, right? And so because we have this, we have designed very specifically for this sector, and we got a good go-to-market partner. So we were able to overcome some of these initial challenges. So distributors were interested to work with us. Airbnb hosts, because there's just no competition in the market, they were willing to try with us, even though things break. We shipped to them again, and then they started testing it, and we started to overcome some of those early challenges. Yeah, and even suppliers as well. When they learned that we are a partner of Airbnb, they knew that potential volumes will come.
Yeah.
We were then able to work with bigger, better suppliers to go from there. Yeah, so it was a lot of iteration, I guess. Yeah.
Wow, I can imagine the inflection point, but yeah, so painful to get there.
Right, exactly. Yeah.
And how do you even come to the point to be like, okay, I want to, for example, build a company, let alone fintech, let alone, Southeast Asia, right? So those are like, and let alone your co-founder, right? So I mean, just saying, how did that happen? Yeah.
I think the starting point was that I think growing up, because I think both my co-founder came from a more humble background. So the goal for us is always to see how can we make Southeast Asia a better place, right? And that's why I entered the consulting, right? That, hey, if I can help companies to operate better and people spend so much part of their life working, like I can make the Southeast Asia a better place. So that was the genesis of it also. But I think the trigger at Harvard Business School was that when Peter Thiel came to school to give a speech, right? And at the time, he just published the book 0 to 1. Of course, trying to sell the book as well. But it was very inspiring. And one thing that he said, which shook me a bit, was that he mentioned that Asia doesn't need innovation. Asia just needs execution because it's so far behind, which is annoying but factually accurate. In 2014, right? When that's the time when you have the Uber of Southeast Asia, the PayPal or whatever, so and so forth of Southeast Asia, right? So there was a lot of room to catch up. So that's why, following with the whole motivation of trying to do something for Southeast Asia and payback, we thought, okay, let's see what can we do for the region. And following the same line of thought that given that Southeast Asia is behind in terms of innovation, let's look at what are the most innovative companies in US in the last 5 to 10 years. So first criteria was what we're passionate about. Second criteria was what we have a path to be number one. So we have seen very good biotech companies, but obviously we're not well suited to be number one in that phrase, that area. And number three is whether it can be a big and impactful company in the region or so. So we actually shortlisted, looking at the last 5 years of innovative companies in US, we actually shortlisted two, right? One is basically Lending Cloud or Prosperna, basically the P2P industry, which was at a peak at a point in time. And the second one was actually a TransferWise equivalent of Southeast Asia. But we figured that, hey, for remittance, you need to be on both legs. I will not win. So at least, we not with Verna and myself. If I look at when it comes to peer-to-peer lending, we can't quite copy the original model with just consumer lending, because at that point in time, we figured that the key success factor is going to be distribution, it's going to be technology. The Chinese will have the strength in technology, the big tech companies will have the strength in distribution. And even though at that point in time, there were not many players coming down yet, but the writing was on the wall that at some point by proximity, they are going to come, right? So, and it also doesn't match with the whole passion of making an impact in Southeast Asia as much, because not that they have no impact per se, but I think productive loans has more in terms of multiplier effect. So we thought we use that as a starting base and modify it for Southeast Asia. And we took the opportunity that Harvard gave to visit all the various P2P at that point in time, Funding Circle, Earners, Lend. I think we did not go to Lending Club, but we went to Prosper and so forth to really learn about how the business is being run and what are the intricacies of the business models and so forth, right? And because we're students, we're very open to share. So we decided to just put together some money between Reno and myself. We did what is now known as a distributed team. We didn't know that existed of that concept at that point in time. We simply hired people using Skype. We put up job advertisements on startupjobsasia.com, interviewed using Skype, and we paid a team using internet banking. And we learned at like McKinsey for due diligence, right, that we check in at 9 p.m. Boston time, 9 a.m. Singapore time with the team, that this is what we're going to do for the day. We check out at 3 a.m. or 3 p.m. Singapore time, like, hey, what have you achieved? And then we repeat the whole cycle also, right? And we thought it was possible because we saw that there was another startup in Indonesia that started also by a McKinsey person from Stanford. And hey, if you can do it, remote control, so can we, right? But little did we know of two things. One was that he had a founder in Indonesia. So if I'd known that he had a founder in Indonesia, like physically in Indonesia, I may not have withheld this belief and run it this way, right? But fortunately, I didn't know. And the second point was that there was a time we started in Singapore because it's the only country that we could set up, incorporate, while not being around. We were super excited, hey, the company is incorporated, because it took some time given that financial society is a gazetted word, but it reflected our vision. That's why we were insisting on it. When we told the team that, hey, the company is incorporated, like years later, the team members were telling me that, do you know that day when you told us that your company is incorporated, we were all shocked. I said, why? Like, it's a good news, right? We were so excited to share with you all. I said, we didn't know that we were working in a company that didn't exist for months. Like, we signed an employment contract with a company that did not exist. I was like, oh yes, that's a good point. But we did pay your salaries anyway. So that's how young and naive we were, despite having a privilege of having very, very good education. Experience.
Amazing. So that's your first company was health and wellness.
Health and wellness startup.
Second one was
called MyZenda.
Yeah.
And then the next thing, as I saw as I was moving out here, another personal struggle was how messed up the process is to buy real estate.
Yeah.
And there's a lot of news and information on social media and vloggers and stuff talking about the real estate market here. And I experienced it firsthand. Everything from people representing properties that they don't have the rights and authority. I experienced agents and brokers who have different prices. One person's selling the same property for a different price. The other one's trying to sell it for a different price. And that one of them doesn't even know who the owner is. We haven't even touched the surface of if it's a legitimate titled property.
Yeah.
So that whole process we tried to disrupt. But again, in my personal humble opinion, and I, no offense to startups and founders trying to do real estate, after $150,000 in 18 months, I wouldn't touch it with a 10-foot pole and somebody else's money.
Yeah.
Right.
It's a rough market out there.
Well, yeah, because also, I think there's a lot of government resistance to empowering real estate.
Right.
Maybe for a different podcast, but I think that's where a lot of corruption takes place.
Right. Yeah.
So the more, the easier it is, right, with technology, it might expose a lot of people's wealth.
Yeah. For sure.
Different podcasts, but I think you got to have those undertows of momentum. Right, in the community around you, like government support. You're in a market like the Philippines and Southeast Asia,
right?
Because every startup needs a little help from the community,
right?
We saw better adoption in real estate than we did in the health and wellness. So the good news is it was better than before, but it wasn't like this, right? So as they say, third time's a charm. I went back to the Bay Area because I was like, oh, what am I going to do? Honestly, I went back for some inspiration.
Yeah.
And I went out to events, try to hear what people are doing. And then I noticed something interesting about the users of our real estate platform. What I noticed was they weren't just listing real estate. They were listing prepackaged food. They were listing clothing items. They were listing vitamins, health and beauty and makeup. Because if you think about it, I don't know if you know, or a lot of people in real estate, but many of them are jacks of all trade. So they were trying to sell other stuff on our platform in between selling that big real estate ticket item. And those were, to me, signs of opportunity in e-commerce. So I went back to my team. At that time, they thought I was crazy. We're going to change again. And we started building, shopping cart, checkout, payments, and shipping functionality. And then January 2020, 3 months before Friday the 13th of March of 2020, which is when the government announced the lockdown due to the pandemic and COVID-19, 3 months before, we had launched Prosperna as an e-commerce platform. So when the lockdown happened, our real estate customers, they were dropping like flies.
Right. You can't buy real estate if you can't leave the house.
Yeah. And they were, imagine. At first it was a couple, we need to pause our subscription. And then every day it started piling up. And I'm like, oh my God, what is going on? But at the same time, we saw this behavior where the Philippines is a retail mecca of the world. The largest malls, People go there, they can get, a haircut, a massage, breakfast, lunch, dinner, go to church, and go to the bar all at the same time. People spend 2/3 of their life there, all that being taken away. And I was like, this is where Prosperna can help. We put more money in the marketing machine, and that's when we saw this. We were doing demos from Monday to Saturday,
Yeah.
8 a.m. to 10 o'clock at night.
Wow. Crazy.
Yeah.
And you must have been doing a lot of those calls as well. Yeah, all hands on deck. I think one interesting part is that in Southeast Asia, there's also a lot of like due diligence risk, right?
Yeah.
So, you're a CPA. So, you know about this, you've done due diligence as well. I think in Southeast Asia, there's a lot of like, you can call it fraud, you can call it waste, negligence, leakages of capital, So, and that makes it obviously difficult, right? Whether it's a small company, a medium-sized company. I mean, the joke always people have is like, there's 2 or 3 books in Vietnam, for example, right? So how do people think about that process from a lending perspective? Yeah, how do you manage that?
I think first and foremost, this whole phenomenon does cause pain to the better players, right? Because now investors or capital markets tend to paint Southeast Asia in a similar brush, and you have to prove yourself so much more than in my view it is fair per se. But I think this is it's just evolution of the industry, and over time, with more good players emerging and proving that our corporate governance are tight, I think that the capital markets investors will change their mind and have an updated view of the region. But when it comes to on the credit space perspective, I think we again did something that's quite contrarian compared to what other players were doing. Right at that point in time, everyone was saying that fintech, as if you don't need a lot of information and can give you a credit score supernaturally, right? Using social media, and print and so forth, which is accurate to a certain extent where it relates to consumer lending. But because SME lending, the reality is that the risk factor is so heterogeneous such that it's not just the business owner themselves, and even less so being reflected on the social media on what we say, right? So they are helpful by that. They are not as statistically significant as some make up to be, right? So that's why we did a contrarian view approach of we actually asked for a lot of information documents from the SMEs. So when others were saying that, you don't need to give this and give that, and they're really just being more like they say that you're using technology, but they're really just taking more risk per se, right? We actually asked quite a significant amount of information, actually more than what the banks are doing. And I think we could do that because what we're really replacing is money lenders. And in the same case of Singapore, money lenders charge up to 48% a year. Or like credit cards, 24% or so, right? So, or friends and families, right? So we're really not competing with banks, we're really competing with all these high risk lenders. And because the next best alternative is actually quite bad, such that the SMEs are actually willing to give us this information. And because this information for a decently run SME, you should have them. So if they can't give us a rate flag by itself, right? And with that, I triangulate the various information, right? That the financial statements, links to bank statements, links to tax filing, links to AR, AP aging, like all these are related, right? And that after a while, like how can this number be so good when that number is so bad? Also, like and it's very hard for you to doctor all these sets of information at the same time. So that's why, from a fraud risk perspective, like there are still fraud risks, but it's actually relatively low compared to what others have thought, right? A lot of it is counterparty risk. The SMEs, they have concentration risk, and if their customers don't pay them, how do they manage also?
Right.
How much buffer do they have, so and so forth? That has resulted in defaults for SMEs.
Yeah, I think counterparty risk is also, it's related to what you said, sectoral, right?
Correct.
Just like, the big mothership construction company,
right?
And the subcontractors all ripple down when there's a default or some difficulty, for example, right? So I think counterparty risk also is a big part that's, I imagine, quite difficult to size. Is there a way for you to size counterparty risk?
Ultimately, we try to manage it by of course, reviewing the AR, AP aging quite closely and seeing whether what they submitted to us is even believable. I think first and foremost is that if you see usually a bank underwriter, where you give them information, the first thing is to put into a spreadsheet and whatnot and compare ratios and stuff, right? For us, the first thing is to see what numbers I can trust, what numbers I need to discount also, right? I think when it comes to counterparty risk also, we evaluate AR, AP aging, but equally important is what is the cyclicality as well as the sensitivity of the numbers. That, hey, your numbers look very good in the next 6 months, but based on the cyclicality of this industry, in 3 months' time, you're going to see a down. So can I actually trust this number to be represented in the future? No. So I need to adjust accordingly, right? Number 2 is also what's the sensitivity of variability of the various costs and revenue, right? Assuming that the worst case sensitivity hits, like how much cash flow can you actually support for repayment? And then finally, what are the alternative source of repayment that can pay us, right? Not just based on the business also, right? So I think It's a lot of battle scars as well as accumulation of 10 years worth of data that has enabled us to navigate. That's why to an extent we see us, I think the original thesis that, hey, we will be able to hold our ground despite big tech companies coming in, I think has gradually proven just because SMEs, the key success factor is not just distribution or technology, right? A lot of it is just historical data. And this historical data, especially for loan repayment data, is extremely hard and expensive to get relative to what a big tech company is giving, right? Just a basic example that for consumer lending, let's say you can give a $1,000 USD loan is quite a decent amount of decent size, right? And if you want to build a decent model, 10,000 unique borrowers, it's just $10 million is doable. If as an R&D cost, right, you just burn it and you get enough data also. But if you imagine for SME lending, $10,000 is not a very big number in the first place. And if you want 10,000 unique borrowers, that's $100 million per market, right? That's a higher barrier to entry. So I think it's really, given that we don't have such money to burn, it's really accumulating over 10 years to build a model that has given us a good advantage, and then further layer on with diversification technology, and of course now GenAI, and finally capital sources that have helped us to build a pretty sizable advantage in terms of managing credit risk.
Right. What were some of the challenges you faced starting the Philippines from your perspective as a business then?
I think the best way to look at that is really putting yourself, or what I try to do is put myself in the shoes and the eyes of the business owner. I mean, if you think starting a startup here is hard as they say, starting any business in the world is not easy. And the Philippines, for the average small to medium-sized business or these large conglomerates, they made tons of sacrifices to get to where they are. And it's just, in general, not an easy place to do business. Like, oh my God, I mean, getting business permits is multiple, windows and lines of paperwork. There's not a lot of data that's readily available if you want to start building a list and doing classic B2B marketing. And there's a significant trust factor gap here in the Philippines. I'm not exactly sure why, but if you're going to sell anything, whether it's the Philippines or any country, you got to have trust.
Yeah, of course. What is the trust factor gap? What do you mean by that? Yeah.
Well, I think that with an environment where many things can go wrong, business owners are going to invest time, money, and resources. And unfortunately, nothing is perfect in life or in business. And a business owner's goal is to reduce the number of risks in order to achieve their goal. I just think it's going to be hard if many of them have never tried technology. Maybe some of the software providers, whether they come from the outside, they're not as committed to the Philippines. We've seen providers fly in and fly out, think that the Philippines is easy, and in 9 months they pack up their bags and go, what happened? It was hard. A lot harder than we thought. We thought because everybody speaks English here, right?
Yeah.
But you just got to be committed and be there regardless of the money that you make from someone. Put the money aside. That's where trust is built.
Right.
Right? Is I'm going to help you, Jeremy, Mr. and Mrs. Business Owner, regardless of the amount of money. I am so committed to solving your problem and goal that I'm going to help you until the end. Not a lot of people are going to go that extra mile because business is so hard.
Yeah.
Because the economy is not as resilient and strong. I don't care what the headlines say. If you talk and see and live with business owners here, they are really at a survival mode themselves. So how on earth are you going to get someone to be open to the idea, to be committed past a few months, right? You got to be their best friend in their journey.
Right. I think, you're starting talking about interesting trends, right? You're talking about, I'll say, societal demographic trends as it relates to property. And also you're talking a little bit about property tech as well, right?
Yes.
Can you talk a little bit more about what the property tech trends or outlook looks like? Because when I look at it, I think of WeWork.
Yeah, of course. Yeah, exactly.
So everyone's like, property tech, WeWork. Yeah. Everyone's like, right. I can't think of anything else right now. But so can you talk a little bit more about what that looks like from your perspective?
Yeah, definitely. I think in property tech, certainly from our industry, we are very focused on any real estate, kind of model or operating model that is very focused on transitory kind of use cases, right? So office sharing is definitely one that WeWork has popularized it. Home rental, home sharing, the short-term home sharing will be companies like Airbnb. But long-term home sharing, you see what we generally call the single-family and the multi-family rental market in the US, right? Where large institution owns a lot of properties and they rent it out for long-term. In Southeast Asia, there's also a general trend rising called co-living, where people stay in like a building and then they might be having a shared kitchen or like a shared common area. and people stay for like 3 months to a year, at least, right? So that is also rising very quickly in Southeast Asia as a mode of living, as a location to live. We have additional dwelling units as well in the US where people buy like a container and they put it in their backyard and they rent it out for their parents to stay when they are traveling over, or they rent it on Airbnb, or they just go there to their man cave, or like their place to escape from like the main house. And then we have a general class of asset sharing, which is typically overlooked. So this could be things like trailer rentals, or like tennis court rental, gym rentals. I mean, I think gym rentals, we do see this happening right now where certain cinemas are converting the daytime into like gym rentals, where at night they can be used for cinema viewing and all that. And a lot of large companies today are all shifting towards like kind of monetizing some of these spare spaces, right, for certain kind of recreational users. Yeah. We are also seeing, tennis court rental coming up quite strongly. We are seeing pickleball court rental, or even car rental. In the US, is very big on peer-to-peer car rental. So this general entire, kind of a rental economy is picking up significantly. And I do think that COVID had played. During those times, it's very difficult for someone to actually have something that's manned, right? If you want to rent a tennis court, somebody needs to go out there, pass you a key, you go to the tennis court and play, right? With a solution like Igloo, it can be completely unmanned, right? And actually, we started work with Australia Tennis Association during COVID, and today more than half of the tennis courts in Australia is powered by our solution, where it's completely unmanned. And this could be completely out there in a suburban area where there's just no Wi-Fi, right? And then somebody can just book a court, get a 2-hour pin, open the door and go and play tennis, just completely unmanned. When we do see this trend growing more and more, I think with trends of sustainability, people no longer want to have a lot of operational overheads. And especially if you're talking about places like Japan, Australia, or like many of the more developed markets, where manpower is expensive, you don't want someone to drive 2 hours just to pick up a key. And sometimes they forget the key when they're driving to the property to unlock it, or they get the wrong key and then you drive back again. So this is a big waste of time. And as a solution, we are trying to champion kind of breaking down the physical and digital divide by providing the access solution in a digital form.
Thank you for listening to Brave. If you enjoyed this episode, please share the podcast with your friends and colleagues. We would also appreciate you leaving a rating or review. Head over to www.bravesea.com for member content, resources, and community. Stay well and stay brave.